So the market kind of needs to take a chill pill. I mean, you saw how investors reacted yesterday. They're really, really nervous right now because you see tomorrow, the Federal Reserve is going to give us their read on interest rates. I think this is a little bit of a temper tantrum, or otherwise known in investing circles as a taper tantrum. But wow, the S&P ending the day pretty miserably, down nearly 3%. Similar story over there on the Dow. And my advice to everybody is to just relax for a moment. This is an opportunity to try and see through, right, with some clarity, what's really going on here. Hello, everyone. Welcome to the Trish Regan Show. I am Trish. And just as I told you in March 2020, not to overreact from an investing standpoint, I'm telling you that now. In fact, if anything, if you can afford the flexibility, this is a time to actually be looking to get more into a market, right? When it's going down, you need to do what is effectively counterintuitive. Again, assuming that you don't need the money tomorrow. It's in that way that you actually have the opportunity to capture a little bit more upside. It's hard to buy, when everybody else is buying. But the market's nervous right now. The market's nervous because you get a few things going on. And I want to get into that because I want to explain sort of the fundamentals of all of this. Fundamentally, I actually think we're in fine shape because I don't think the Fed is really going to pull the rug out from under. I think you have a Fed that's quite willing, ready and able to keep printing money just like they have, and they're not really going to change that in a massive way. Sure, they may taper a little bit and pull back a little bit on those bond purchases. I'd argue that in some ways it's really healthy for the market because the market's gotten like way too sort of ahead of its skis in that investors are, just blindly going in with no real assessment of what risks might be there. So don't worry about the Fed actually doing something really, really drastic. I mean, they're very much interested in making sure that things are steady and good. So there's that. And then the other big one is, of course, China. So a lot of worries right now that China's experiencing effectively their own kind of Lehman Brothers moment. Evergrande, which is a really big real estate conglomerate that goes in and buys and invests in real estate, builds up big buildings in China. They're struggling. They owe a lot of money, and they're worried about being strapped for cash and possibly going out of business because they can't pay off their creditors. That could be problematic in China and in Asia. I don't think it's a contagion that's actually really going to hit U.S. financial markets in a massive way. And the reason I say that is because don't forget, our banks have gone through numerous stress tests since the '08 days, as well as the European banks as well. So we have that going for us. Now, granted, it can cause problems when in China there's a slowdown, and there will be a slowdown associated with this because of the size and scale of the company. So if it goes under and its creditors are left really struggling and equity shareholders are wiped out, that does have a ripple effect on the economy. But don't forget, companies have gone out of business before. It's a question of how diversified is that risk. How many companies here in the U.S. may have been exposed to it? I don't think many. Again, I don't think that a lot of U.S. banks were out there aggressively lending to this particular company in China. If they were, then sort of shame on them and shame on those stress tests. But for the most part, we should be somewhat insulated from that. Now, I qualify that and I say somewhat only because when China's economy falters, it can have an effect on us because they're our trading partner. So be aware of that. But in no way does it really merit the kind of sell-off that we saw in Monday's session, in my opinion. And so you've got to factor all that in. The other thing that's going on is that, you get a debt ceiling controversy and crisis. Janet Yellen, let me share this with you, writing in the Wall Street Journal on Monday, basically that we could face a catastrophic economic event if they do not raise the debt ceiling. She's concerned about it. They're always concerned about it, right? It's like, here we go again. Remember, they're politicians, so they use this for all it's worth. But she is right in that if we were to default on our debt, well, yeah, that would be a really big problem. And the reason that would be a big problem is that one of the reasons we pay such low interest rates and there is all this liquidity is because everybody trusts the U.S., right? When things get bad, where do they come? They come to U.S. Treasuries, which is why they're only paying like 1.3%, a little more today, given the concerns and the stress out there. But she's saying that this would be a widespread economic catastrophe and that we can't default on our debt. It's something we've had to do, that is increase the debt ceiling 80 times since 1960. Yeah, we do that because you know what? We just say, all right, well, we'll be able to spend more, right? That's just the way it works. We say, okay, you know, we'll raise the debt ceiling and we'll spend some more and we'll print some more. And we kick the can down the road, so to speak, as they say. Anyway, she writes in the Journal, doing so would likely precipitate a historic financial crisis that would compound the damage of the continued public health emergency. We would emerge, she writes, from this crisis a permanently weaker nation. Well, that's correct. I mean, of course, as I said, we shouldn't be in this position to begin with. I don't believe in defaulting on your debt. You know, we've never defaulted on our debt. This is something I share in common with Alexander Hamilton, who didn't believe in defaulting on debt. Look, you can't do it. You shouldn't do it. I realize that everybody likes to treat it like a political football, but we should be a little bit more mature than that. The other thing we should be really is more responsible in that we don't spend more than we have. But of course, that's what we do. That's what politicians do. They overpromise, they underdeliver, and they spend a lot of money. And so there's a lot of hand-wringing right now going on. Oh, what's going to happen with the debt ceiling? I would be shocked if the U.S. ever defaulted on its debt. Well, then Biden really would go down in history as the worst president ever. I know a lot of viewers of this program probably believe that he might already be in that spot, given what we've seen out of Afghanistan and the disaster that was there, given that all of our allies are angry with us, so much so that France now is pulling its ambassadors, given that we've got a real border crisis, which I'm going to get to momentarily, a humanitarian crisis there at the border that the government doesn't seem to be committed enough to. I mean, my goodness, if that were to happen, then, well, let's just say, yes, I agree with Janet Yellen on this. The world would never be the same. But part of the reason we're in this position to begin with is because we just print too much money. Now, on Wednesday, tomorrow, we're going to hear from the Federal Reserve and we're going to get a sense of whether or not they're going to continue printing money. My bet is they will try to make it clear. It's like the parents saying, you know what, you really shouldn't stay out past your curfew, but we're not going to kick you out of the house. Right? You can still stay in the basement on the couch or whatever. You know, it's to their young adult child. Look, the Fed is not going to do something drastic. They're going to continue trying to telegraph that we all have to try and live without them, and that they want to back away from all the bond buying that they've been doing, which keeps interest rates low, right? So if they back away from that, and it's a free market for U.S. debt, and the U.S. isn't actually buying it, well then, yeah, you're going to have interest rates move higher, but that's actually kind of good. You know why? People are struggling right now. It's hard if you're on a fixed income. If you don't have more money coming in, a lot of people we've learned, because they've exited the workforce, they don't have as much money coming in the door. They're living on a fixed income, and they can't get any interest off of that. So if the Fed were to back away, then interest rates would go up a little bit. That has a suppressing effect on the overall economy. And so that's what has some people, including investors, including these markets, a bit nervous. But it might actually be the healthy thing to do. But God forbid, the Fed actually do the responsible, healthy thing. Right? We've seen over and over again that they're far more willing to just keep printing because, well, that's what they know how to do. And somehow they think that this financial engineering makes it all work. I don't like financial engineering. I don't like what the Fed has done. I do believe they're running the risk of creating other bubbles down the road. But nonetheless, as an investor, you need to be a realist and you need to understand what they're doing, which is that they're printing and they're going to continue printing. And so take everything that they say kind of with a grain of salt. Yes, maybe they'll back away a little bit, perhaps not as much as intended. And I think they're going to keep interest rates low, again, for the foreseeable future, because they've communicated to us over and over and over again that it's actually employment they're most worried about, not inflation, even though we have plenty of that. Plenty of inflation. I've been pounding the table on this. You know it if you listen to this podcast. By the way, just a reminder, make sure you do subscribe to this channel on YouTube, the Trish Regan channel on YouTube. Just hit that subscribe, hit that like button, or on Rumble. If you follow me on Rumble, you get a daily email there every single day, or trishintel.com, trishintel.com. That is my website. Sign up for the newsletter. You will get this podcast every single day in the mail, along with all the stories that we're reporting on there at Trish Intel. So I encourage you to do that. But the reality is the Federal Reserve will be there, continuing to lend its helping hand. And as a result, yes, expect more inflation, including in asset prices. I don't think that that's going to change overnight. I worry about systemic crises, right? I've been through them. I worry about when things get too overheated and you don't have the earnings to justify them. That was what I saw in 2000, and I was warning about it the whole way. And it's what I saw in 2007, actually, as far back as sort of 2003, 2004. I was reporting on this and growing quite concerned because I knew once interest rates moved up and people's mortgages reset, they wouldn't be able to afford them. And the problem that nobody quite understood, and this is going to get me back to China, is how entrenched all of those various mortgage products were with all the different investment debt vehicles out there. So every single bank was holding this stuff. They had been sold and resold and resold and resold and resold again. And it got to the point where like people didn't even know what they had, right? Like these subprime loans would go inside of another loan. And so you think of it like an omelet, right? You get all these beautiful eggs and these beautiful vegetables, and then you get a few leftover vegetables. I wouldn't do this, but you know what? You know, there may be restaurants and stuff out there that do that. Oh, well, let's just throw these sort of not so great ones. Let's make use of them and put them into the omelet as well. And so it looks really pretty on the outside. And most of it's really good. Like most of those vegetables are really, really good, except you get a few bad ones in there. And the few bad ones ruin the whole omelet. Well, that's what happened with all of these loans. And so the question now, bringing us back to China, is whether China's Evergrande is similar. In other words, did that Evergrande debt get pushed into other kinds of loans? And how many people own that? Again, given what we went through in 2008, we've seen this movie before. And the good news is we have all kinds of stress tests and vehicles to prevent that from happening in US banks and in European banks. So it could be problematic in Asia, which, yes, is troublesome for our economy, but it doesn't spell systemic crisis. Again, I'm on the lookout for that real systemic type thing. In terms of earnings, well, we're going into earnings season in a couple of weeks, full-fledged, right, once October comes. As far as the September data, we've got a lot of big companies reporting this week, and we'll be watching for that. People are anticipating a little bit of a pullback, a little bit of a slowdown. We'll see whether or not that's in fact the case, but they're still anticipating growth. In fact, if you look at what analysts are estimating, it's not as great as last quarter, but it's still pretty darn good growth. And so if we can manage to continue growing, if the Fed, and I suspect it will, can manage to continue printing, and as long as our politicians don't do anything totally crazy as far as the debt ceiling goes, well, we kick the can down the road and we get to live another day, which is why I say if you have the flexibility to not need this money tomorrow or in 6 months or even a year from now, and you can put a little bit of money into the market on days when it's really down, that's what you want to be looking for. Those are the opportunities that will really pay off in the end. Again, remembering that you want to keep a clear head in all of this. And look, even if it were, even if, God forbid, it turns out everybody and their cousin is owning some piece of Evergrande and the whole system is going down, I would still remind you not to bet against the United States of America. And that ultimately, in time heals all wounds, right? We will come back, just as we came back from the dark days of 2008. Be diversified, of course, be diversified. You don't want to be in one stock if that one stock goes under. And a reminder, too, to be diversified and to look at things like precious metals. I mean, gold is a great example, very well-proven hedge to inflation, and also the kind of thing that tends to be in that safe category. You know, I like gold because I do believe inflation is here and there's going to be plenty more of it in the coming years. And I like gold because, you know, when the market starts to really go south, you feel like you have a little bit of cover, because that's one area that typically, not always, but typically is able to maintain its value, and people see that as a safe vehicle during downtime. So I still like gold. I want to encourage you to call my friends over at legacypminvestments.com. You've probably heard me mention them before. These guys have been in business more than 40 years. They can help you figure out how to put gold into your portfolio. It's not easy. I mean, you could buy an ETF, but if you want the real stuff, right, you've got to actually have somebody hold your hand a little bit in this, because it is complicated. You need to figure out where to store it, how to get it to yourself, or how to get it to your bank or your storage facility or whatever that is. If you want a gold IRA, you've got to figure out, okay, what would that IRA look like? They can help you. LegacyPMInvestments.com, 1-866-589-0560 is their phone number. I'm going to give you that again. It's 1-866-589-0560. And look, to me, it's sort of a no-brainer. You want to be diversified. You want to make sure that you are prepared for inflation, and you want to make sure that even if you are going into the market on down days, that you have something that's kind of going to just, you know, even out sort of the pain along the way. Now, you know, look, the flip side is, you know, everything goes in cycles and things can, but you look at the 20-year history of gold. Someone was telling me the other day, I actually told them to buy gold 20 years ago, a family member, and they said, you know, Trish, you said buy gold back when it was like 300 bucks an ounce. And I'm like, yeah, exactly. Did you take my advice? I hope you did. So I do think it's going to continue going higher. So keep an eye on that, and do call my friends over at Legacy Precious Metals. I want to turn now to, I mean, if it's not just economic stuff, right, and market stuff, it's political stuff, it's human tragedy, and this is what we're seeing play out on the border right now in Texas. It is devastating. I mean, it's so hard for the people of Texas, right, in Del Rio, Texas. You've got a Democrat mayor there who's like, wait a second, where's the administration? Apparently, Kamala Harris is too busy, you know, doing the TV rounds on shows like The View, and Joe Biden is too busy out biking with his wife to really pay attention to this in the way that they need to. I'm teasing a little bit, but the reality is it is not a good look. When you have a crisis like this, and I understand everybody has a personal life and he should keep up his health, for goodness sakes, at 78 years old, and given how he's been presented as of late, he needs to work hard to keep up the health, and I encourage him to keep doing that. So good for the biking. But look, it's just not appropriate. You should probably think about those photo op opportunities. That's the one where, you know, just go to the gym by yourself in the White House, or bike somewhere where you don't have the reporters just all out and about, because it's not a good look. All of these people in, well, just in Del Rio, Texas, of course, the residents there that are struggling with this, as well as those people from Haiti that have migrated. I mean, they're saying 15,000. They did start to put them on flights at our expense to take them back to Haiti, but it's not going to be enough. And thousands more keep arriving every single day. So this is really and truly a crisis, a full-blown crisis. And I do blame the administration for mixed signals and false hope. In other words, instead of saying, look, we've got a border, and it's sealed shut. It is, you know, and the wall, if nothing else, it was symbolic, right? It stood for something. It showed the rest of the world that we weren't willing to take everyone in. And as much as we all want to help people, and I think Americans are tremendously generous people, I mean, there's a limit in terms of what we can do. And we do need to protect and secure our own people first. And there needs to be a process for this. You can't just show up and suddenly come into the country, not to mention all the health challenges that so many of these people are plagued with. I mean, hey, if you're going to require vaccines for every American, one would think that it might actually transition as well to some of these illegals that are coming here. But that's not the case, and it's continuing to be a problem, and I don't see them being able to quite get a hold of it. I don't think he's politically, in terms of the media, that savvy. And even the media, I mean, by the way, I should just point out, can you imagine if this were Donald Trump right now? Can you imagine what they would be saying? Of course, he'd be out there saying, oh, they're going on planes and I'm building that wall, you know, 2 times the size of what it used to be. I don't know as they would have come in the same massive scale that they're there now, however, if it were Donald Trump, because the message was being read loud and clear that people were not welcome and they would be turned away. And that messaging, you know, look, for whatever it's worth, it's kind of important. No other country, I mean, we're not like out on a limb here. No other country would welcome people the way we have. No other country has policies like that. So I think he's got a lot of work cut out for him. It's not politically easy. This is the reason Kamala keeps ducking away from the topic. It's the reason she's never, still to this day, physically gone to the actual border. And it's not one that's going to win popularity contests among the left. I mean, the AOCs and that group, less so Bernie Sanders. I bet Bernie Sanders, actually, because he's got a slightly different variation on all this, would be a little bit tougher on some of the immigration issues. But the AOCs, the Cori Bushes, the Ilhan Omars, this is not going to fly with them. So he's running a political risk, but he's got to do it, frankly, just for the health and safety of our country and the health and safety of people in Texas. I want to get to another story. I've been warning you about what's happening in terms of this administration and the court efforts that are underway. There is a desire right now to really reconfigure the Supreme Court of the United States of America, which I find pretty darn awful when you think about it. I mean, look, it's been tried before. It's always been shot down because there's usually been enough mature people that understand that would actually be a really kind of dangerous precedent, and it runs the risk of putting our court into a position where it becomes somewhat like the House of Representatives, right? And it becomes a total free-for-all. Our court shouldn't be political. I understand people may have a conservative or liberal view or interpretation of the Constitution, but it's really not a politically oriented body, and we don't want it to become that. But we run that risk if the president is going through with this. You know, he's got the Supreme Court Commission to study the makeup of the Supreme Court, and if he were to appoint additional justices, then that could actually mean that the next time we get a president who's a conservative, well, that person, he or she, would come in and appoint more judges on the conservative side. And then the next president comes in and tries to tip the balance, and you see what happens. It would go back and forth, and before you know it, we'd look a lot like, I don't know, Venezuela. The other risk you run, of course, in this is that because the court gets stacked, only one party stays in power. Definitely like Venezuela. I mean, that's in fact what happened. Hugo Chavez packed the courts. And so that country has been, just in decline for the last 20 years in a really shameful way. I remember 20 years ago when it was the bright and shining light, right? In Latin America, they had this tremendous reserve of oil that I visited actually in the Orinoco region of Venezuela. And it was all squandered. It was all squandered by socialists who really didn't care about maximizing their market opportunity there and did things like pack the court. So my friends over at First Liberty, it's a wonderful law firm that's totally nonprofit, and they are committed to making sure that our court is preserved and that we don't run into a situation like Venezuela, where you have effectively a supreme coup, as they call it. Supreme Coup, COUP.com is their website. And I encourage you to go there, sign their petition. The petition is going to the White House, and they're trying to tell the president, hey, you know what, Americans care. We care about our court and the integrity of that court, and we don't want you doing this. So check them out, supremecoup.com. It's a very worthy cause that they have embraced, and it's something that I think, regardless of party, is smart to do. Also, just a reminder, make sure you go to my website, trishintel.com, and sign up for my newsletter, because it's a crazy time. We're all over this market. Look, I again do believe in the long-term fundamentals of this country and the long-term fundamentals of our economy and the long-term fundamentals of our markets. I think the Fed is going to do whatever it needs to do to keep everybody pretty comfortable. And I don't believe that, we're going to be struggling the way we seem to be in the markets, at least in Monday's trading. I think that this is eventually going to work itself out. And so, again, if you have the flexibility to put money to work, these are opportunities that I seek. I mean, I want to be putting money in when the market is going down. If it goes down again tomorrow, again, you dollar cost average in. You figure out how much money can I really, afford, and still be able to sleep at night, because there's a little bit, dare I say, a little bit of Vegas, right, in all of this. And so you want to make sure that you are comfortable and that you don't need that money right away, but you put a little bit in, especially on down days, but at least, once a week, getting some money into this market that can stay there over the long term. I appreciate all of you watching and listening. Go to YouTube, Rumble. Make sure that you subscribe to my channels there. Make sure you go to Apple iTunes and download the full audio version of this podcast. You can also get it on Spotify or wherever you get your podcasts. It's so good to see you as always, and I'll be back tomorrow.